Please read this disclaimer carefully before proceeding further.
Welcome traders to analysis of a DXY dollar index. Let's see what kind of opportunities we have. Thanks for joining me here. Now what we have on dollar is that there is a W pattern forming, and if you remember, we have been looking for long positions from this area because there are a few factors in here. So first one was if I go and look at the monthly time frame, then on monthly time frame we have this previous demand area. Market came here, went up, came back down to create a kind of double bottom here, and our market is rising. And this is what I've been saying for months, that the dollar is going to be bullish and it is expected to reach near about 94 or even 95 area. If it becomes little more extended, then it can go to 96 as well. The reason behind that is not because of any political moves or any policy or anything. It's simply like looking at the chart, this is simply a demand area and the market is there, so we can expect market to go upwards. That's on monthly time frame. Now if I go to the weekly time frame, that double bottom looks like this. We had the previous test and now we have tested again. There were several rejections, 1 2 3 4 rejections from here, and we were expecting it to go up because it wasn't able to break this particular level of 90. So it started to move up. In some feeds there is a little gap left here, so there can be like a swift move to the downside, so you have to be careful if you're long on dollar or if you're using dollar for analyzing other currency pairs or other markets. Then you have to be careful with this, especially there is a news coming on gold this week, which is kind of important news. And there is a lot of perception that gold and dollar are like an inversely correlated, so you have to be extra careful with that news. The market can come down to close this gap. Now not all the gaps are closed like immediately. Sometimes they take months or years. On Euro USD there was a gap which was closed after 3 years, so you never know whether this is going to get closed this week or this month or next year or when. So but you have to be careful with this, so better to put it on your list. Now there is a gap here as well, so the market could be heading into that, and this is what we are expecting. But right now what we can see, that market has created a W pattern here and there is a W pattern here, which means the market was expected to go down, and this is what we talked about last time. So what we have is, if I go to the daily time frame, the market created this W pattern and it started to go down, and 200 moving average became kind of like support here, but I'm not expecting it to hold. It can actually go down a little bit further down, and if, as I said, if it starts to go down, then it can go all the way down to close that gap, which is somewhere around here in this area. Now this is the W pattern which has been completed, and the market is right there. If you look closely, we are rejecting this level. There is one rejection, two rejection, so the bias is still towards to the bullish side, where we have this gap. The market can actually start to move there. A lot of traders can actually visualize this as different kind of pattern, which is something like this. They can treat this as a flag pattern. So this is what we have, but in our FCP methodology we do not use these subjective patterns because they are very subjective. It depends on how you draw them. We have specific rules on exactly how we draw things, and all of those rules are number based. So we'll never draw something like this, but I'm telling you because a lot of traders want to look at these things as well. So this is a flag, and if it starts to break to the upside, then you know what's coming, and if it starts to go down, then what's coming, because sometimes these flags can also go in the opposite direction. So this is what we have here on a 4-hour time frame. Let's go back to daily time frame. So what do we have is, if I bring in at Vata and Visage as well, if you have Vata and Visage, you know what I'm talking about. On daily time frame, the market is showing us a bearish move. There is a bearish signal here. We have red color, we have red color, we have signal, and that means the market is expected to reach this particular profit target. And remember, we never actually came back to retest Vata curve as well. So if it starts to go down, then it can come down all the way to Vata curve. In fact, close the gap somewhere around here. It's not, that gap is not visible on all the feeds, but there is one here, so it can come down all the way down to here before it start to move up. So you have to be careful with this, because the Vata is also showing that it can fall down. Okay, so it all depends on how this week plays out, because we have month end as well, so you have to be extra careful. So let's go to the monthly time frame, because that can actually show us a little bit better. Now this, if you remember, I still do not feel very comfortable what has happened here. I was expecting this candle, this black candle, to close inside water wave. So the current month's wave, the current month's candle is not giving me much confidence as of now. Like, so there can be a little downward move, but we trade what we see. So right now this is obviously a bullish candle. If it stays like this, then we can expect market to move upwards, and it can come to water wave, which is going to be 95 area. And this is what I've been telling against all those blogs and news items and everything for months, that the market could come into somewhere around here. Let's go to weekly time frame once again. On weekly time frame, we have a bullish signal here. This is blue, and the market is expected to go higher, but that's on weekly. That means it can take few weeks to happen, and next week it is possible that it can fall down to near about this level. So let's remove that and put in a line. So it can fall down to this level, and then if I go to the daily time frame, that level matches with water curve automatically. So that means there is a chance that market can fall further down. We also have signals here, so let's see how the market opens up. We know the upward target is somewhere going to be around here, where we have this gap left. So let's bring in original analysis. So the market is, this is the FCP zone, the next one is around here, and all of these levels are going to be helpful. This is the gap that I was just talking about. So I'm going to post this in our Telegram group, in this chart, so that you can have a look at these levels. Hope you enjoyed this analysis. If you found this useful, if you found it interesting, then please hit the like button and put in a comment below this video, letting me know what you think about this analysis, what is your own analysis or opinion on the dollar. And if you have any questions, also ask me in the comment section, and I'll see you in the next one. Have a great trading week next week.
If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to wikinstar.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students, and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to wikinstar.com, and under training section you'll be able to see and submit this form.